We are about to see a new week of trade right here on Wall Street, and as the dog days of summer are winding down right behind me here at the big board, investors, they're anxious to break out of here and get the extended holiday weekend started in the U.S. as soon as possible. But before that starts, let's talk about this past week. So far, it's been one for the record books with a strong start to the week, but a weak finish. The S&P 500 and the Nasdaq continue to climb to all-time highs in the early week, pushing them higher. Strong results for tech companies. But at the same time, the market's taking a bit of a tumble to close the week, as on Friday, the monthly jobs report, the monthly non-farm payrolls came in well short of expectations, shocking investors and sending the big board packing with a big loss. And now it's time to look ahead. Will we see more seesaw action in the markets? Will the markets move in either direction, left, right, up, down? There's a lot of action going on right behind me. The real question is, how will the markets perform? Let's now take a look to see how the markets are shaping up to start off the new trading week here at the New York Stock Exchange. Now, we begin on Monday, and it's a very quiet session, especially here in the United States, with the markets closed for the Labor Day holiday. So we kick off the week on Tuesday. Tuesday first begins down under with Australia's RBA interest rate decision, that of which is expected to come in at 0.1%. Meanwhile, keeping on that side of the world, Japan will see the release of its second quarter GDP read. Japanese GDP expected at 0.4%. Then the remaining action for the session will be in Europe, first with German July industrial production figures, but also in the entire EU with that region's second quarter GDP on tap. Expectations call for EU second quarter GDP to come in at negative 0.6% quarter over quarter and 13.6% year over year. Wednesday sees focus mostly in North America. First, we begin with the Bank of Canada's interest rate decision. That awaits the Bank of Canada's rate, expected to remain unchanged at 0.25%. Meanwhile, right here in the United States, we will see the release of the U.S. Federal Reserve's beige book. Investors will be focused on that as well. Thursday sees even more action out of Europe, this time with the ECB's interest rate decision. The European Central Bank, that rate is expected to remain unchanged at 0%, while right here in the United States, weekly jobs figures are also on tap, while on Friday, we see action out of the UK with July industrial and manufacturing production figures. In addition, British July GDP awaits, and that's expected at 0.5% month over month. At the same time, consumer prices await out of Germany. Producer prices are also due out of the United States, while in Canada, we will see that nation's unemployment rate, that of which is expected to come in at 7.4%. And before we sign off, quick heads up, keep an eye on geopolitics and more data releases as they can move the markets. And also remember that it's an abbreviated trading week coming up here in the United States. The U.S. markets are closed on Monday, so expect a bit of a slow start domestically. And until next week, live from the New York Stock Exchange, wishing you all a safe weekend, I'm James Swinney, reporting for ICF.